My apologies for jumping on what I hope is just a topical trend on personal finance YouTube videos, but let's chat about the impending market crash of 2022. You've probably seen the videos, or at least you've seen the thumbnails from popular YouTubers like Stephan, Andrai, Jikh. Oh no, now we'll never be friends. And Canadian stars like Griffin and Stephan from Cash College. And yes, I did say stars. Those guys are great. You should definitely check out their channels. But hold up, don't go yet. Let me get to what I want to talk about, which is why I feel I'm prepared for a market crash in 2022. Welcome to the channel. I hope you and your investments are doing well. Let's get right into this. Let me tell you how I am prepared for a market crash in 2022. Now, I feel like I can say this with some confidence when I look at how I have set up my two investing accounts. You've seen me talk about my tax-free savings account on this channel before at length, but you've never heard me talk about my Rrsp account. So this is completely something brand new that no one has ever seen before, so you are going to be the first. But starting with the tax-free savings account. It is no secret if you've watched any of my videos that I have chosen a dividend investing strategy to build my wealth. Picking quality companies known for paying a consistent dividend as well as increasing that dividend year over year. So if there were to be a market crash in 2022, when I look across the 12 different positions that I hold, it is a very, very extremely unlikely that all of them would just drop or reduce their dividends. If anything, it would probably be less than a quarter who would just ever so slightly reduce their dividend payments. And that's just solely based on what I saw happen in March 2020. Dividend payments are going to be coming in month over month. Let's look at the Royal Bank of Canada as an example, ticker symbol RY. When I first bought Royal Bank, it was $108 a share, and it was paying, I believe it was $4.32 a dividend annually. Fast forward to today, it's now 30% higher, roughly $130, $135 a share, and the dividend payment is $4.80. So now, if the crash were to happen, the Royal Bank stock goes back down to like 100, I'm still going to receive $4.80. That doesn't change. The money still comes in. And like many of you, I have decided to reinvest those dividends to purchase new stocks. And so I'll be purchasing them at whatever price the stock market falls down to, which is great. You buy them on sale. But it's seeing those dividend payments come in consistently at the value that I originally bought them at that makes me feel comfortable. I can sleep at night, and I can look at my wife and say, look, honey, I do know what I'm doing with this stuff. The second way that I know I'm prepared for a market crash is because of the way I have diversified my two investing portfolios, which is why I'm sharing with you for the first time my Rrsp portfolio breakdown. Now, I'm not going to show you the values inside the accounts because that doesn't really matter. What really matters, what you should pay attention to, is the diversification. Now, I cannot claim that I brilliantly came up with this portfolio idea all on my own because it is completely modeled after Ray Dalio's all-weather portfolio. If you don't know who Ray Dalio is, he is an American billionaire investor who founded Bridgewater Associates, which is responsible for managing the money of extremely wealthy people. He and his team analyzed the market performance over decades and came up with this perfect diversification. Now, this diversification didn't just look at the asset classes, but what it did was it looked at the risk diversification. So that way their clients and their money would be able to perform moderately well in different market circumstances. So they were diversifying the risk and not the assets. So they took this all-weather portfolio and they tested it against past performance, and sure enough, it worked extremely well. So now they apply that against their clients, And so if there is any kind of market crash, the amount of money that those accounts would drop was significantly reduced, as well the time that it took for those markets, for those accounts to rebound was reduced as well. Before I share this, please remember that this is not financial advice. You always need to do your own research. I'm just a guy on YouTube who was seduced by how simple and easy it is to grow and manage your own wealth. As well, it goes without saying that no portfolio is ever crash proof. There will be some losses. Prices will go down. But what we can control is by how much they go down and for how long they stay down. So here is my Rrsp diversification plan. Starting with equities, they make up 70% of the portfolio. 70% because that is where the majority of the growth is actually going to happen. Growth happens in equities. So if I want more growth, I would change that percentage from 70 to 80%. However, the higher the percentage, the more risk. Because I would love to retire in 20 years, I'm keeping it a little more conservative at 70%. So of that 70%, I have 50% of the equity stocks that I've invested in the US market, 40% in the Canadian market, and 10% in the international market. I am using Vanguard Etfs for all of my equities. Starting with the US, I am using VUS, which looks at the entire US market, and VFV, which looks at just the S&P 500 companies. For Canada, I'm using VSC, which again looks at the entire Canadian market, and VDY, which looks at the Canadian market, but only the high dividend earning stocks. And for the international markets, I am using VIU, which looks at all non-North American markets, and as well as VIDY, which looks at non-North American companies who pay a higher dividend. After equities, bonds make up 20% of my portfolio with long and short-term bonds. Long-term bonds represent roughly 60% of my holdings, and the remaining is short. I'm using the Vanguard ETF for the long-term bonds of VLB, and for the short, I'm using VSC and VSB. Now, VSC is short-term corporate bonds, where VSB was all short-term bonds in Canada. And I'm going to pause right there because I am really curious what people think about bonds. Am I alone in this? I know interest rates are low, and maybe that's kind of the reason why you wouldn't want to invest in bonds. Let me know in the comments what you think of this investment strategy. With 10% left of the pie, I decided to deviate ever so slightly from Ray Dalio's all-weather portfolio and put 5% into real estate instead. So using the Vanguard REIT ETF, VRE, I put 5% of my money in there. Now, I don't know yet if this is going to turn out to be a great idea or not, because historically, REITs seem to move in the same direction as equities. This remains to be seen if this was a wise decision or not, but I definitely wanted to make sure that I had some real estate in my portfolio regardless. And the remaining 5%, I decided to put into Pokemon cards. I'm just kidding. Who the hell would do that? Oh no, I think I really blew it with Andrai now. The remaining 5% is actually in gold, that is what the all-weather portfolio shows, but they're putting it in at a rate around 10%. And Vanguard actually didn't have any ETFs to cover the gold market, so I had to look elsewhere, and so I found iShares. So the two I'm using are XMB and CGL. If a market crash were to happen between the dividend investing in my tax-free savings account and the all-weather portfolio approach, I feel I'll be able to sleep soundly. There will be no need to panic, and I can just ride out whatever kind of crash might happen in 2022. I hope you found some value in this video, and if you did, please hit that like button and hit subscribe as if your life depended on it, as if it could prevent the crash. Hit subscribe. And let me know in the comments, what are you doing to prepare for the market crash? Have you seen any great videos on YouTube that really talk about this topic and just really got you thinking? I'd love to know, I'd love to kind of learn more what you and I can do to protect ourselves. And don't forget to use my Wealth Simple Trade link down below, where you can get one stock up to the value of $4,500 just for signing up and investing your first $100, as well Wealth Simple Cash, where you could get $10 free and then get 1% off of all purchases you've made. Keep it in the green, everybody. We'll see you in the next video. Stay safe. See you later.